guys, how are you? How are you doing? This is Shocks and this is Shocks Capital FX. Today we're going to be looking at top-down analysis and we're going to be using only 2 time frames. This is like nothing you've ever seen before, so you have to stick around and see what we are doing here. We're going to be using a time frame like H4 as our higher time frame, and we're going to be using a time frame 3 steps below it to find entries, and I'm going to show you all the patterns or the rules that you need to see on that particular time frame, right? So guys, let's just dive right into it. So on the H4 time frame, we are going to be looking for order blocks, right? M15 time frame, that is 3 steps behind the H4. You're going to be looking at what? At order blocks and breakers to get your entries. So I prefer order block and breaker entries. So that's what we're going to be doing on the what? On the lower time frame, which is the M15 in this case. So stick around and bear with me as we study EURUSD here. So this is the EURUSD chart on our MT4 platform. So what you are going to be seeing here is this. You have what? You have your H4 order block. So what you're going to do on the H4 is you're going to be looking for what? For H4 order blocks, right? H4 order blocks that take liquidity, right? If you have watched our last video, you clearly understand that when we say take liquidity, we mean order blocks that break points like these relatively equal highs, order blocks that form and break that, right? So this is the order blocks that we are looking for. And if you go to the GBP USD on the same chart, you can clearly see that this is liquidity resting above these 2 highs, and this order block took all that liquidity, and when price came back, it was taking those small liquidity, as you can see in this picture right here, until it retested the order block. So this is what we are seeing. So on the H4, what you have to do is identify the order block, then you go on the M15 and get the entry. So this is the order block that we have identified on the H4. So if you go even back in time, you can identify all these order blocks that you see here, or these order blocks that you see, you can identify them and do the same thing when you go to the lower time frame, which is the M15. So I'm just going to mark here so that you guys can visualize what I'm marking and what I'm going to be explaining to you guys. So this is what we are doing, but we are interested in this one, which is the most recent one, and we are looking forward to price getting to this one, to this order block, and we want to be doing business at that particular order block at the origin or at the source. So this is what we have. We go to the M15. What do you have, or what do you see on the M15? Okay, I'll explain everything. Number 1, you have to align yourself with what? You have to align yourself with the order flow on the H4 like we did, right? When you come to the M15, you have to look for 3 things. Number 1, you have to look for what? Break of market structure, like what you see here, which is a break of the last swing high that was going the opposite direction. In this case, the last swing high that was going down, right? So this is the break of structure, right? And the building up of what? Of liquidity. After that, what do you go and see? You go and look for what? For your order blocks in this area. So this is the M15, and your order block that you're looking for is what? This tiny order block at the base here. So this is what you are seeing on this particular chart. What do you see? The next thing that you're going to be looking for is a steady retracement back to your order block with 3D. So this is 3D, as you can see. So price retracted back to that order block, and what you are going to do is you're just going to set your limits at that particular OB. And if you set your limit here, you are going to be risking as little as 4 pips, and you are going to be going for this high, which is 52 pips. So it depends on what you want to do. You can set limits, or you can trigger as you go, right? So after that, you can be adding your entries as price goes. Why? Because you are working with you are working with an H4 target. So the next liquidity target on this H4 is this zone. So this is top-down analysis. You don't just analyze to get into the trade. You analyze to actually get the entry and get the target. So from what you are seeing here, this is the target, the next liquidity point, and as you can see, price is straight through it. And if you come to the M15 here, you clearly see that particular zone that you're talking about is what is the same zone that you find on what, on the M15 on your entry zone, right? You see this red line at the top here, your entry is here, and the line that you're looking for or that you're trading will be up here. So this is what you are going to be doing, but I prefer going for what, for 1 in 3. So I don't like to be holding for edges. So if you want, you can hold, but if you don't want, like me, you can just day trade and get out of trades as you wish, right? So let's look at this next example on the what, on the EURUSD, right? So this is EU. We can also consider this order block that you see down here, or that order block that I had marked. So if you go down to the M15, what are you going to be seeing on that particular order block? You're going to be seeing something that looks like this. You see, price did not exactly get to that order block that we had marked. And in a scenario like this, what do you do as a trader? You don't touch anything. You don't trade things like this. Why? Because if price consolidates just on top of an order block, it means it's building what? Liquidity. And this order block is the one that we are most interested in. So what we are going to do is, remember, I said you look for 3 things. Number 1 is break of market structure. Number 2 is M15 order block or breaker. Then number 3 is the London Q zone. So if you find your order block, you have to know that that particular order block is going to be retested in the what, in the London Q zone or the New York Q zone, depending on what Q zone you trade or on what session you do trade. So on this one, you can clearly see that the order block was retested in what, in New York session, and we want to be taking our trade in the London Q zone, as you see on this one, on these 3 rules that I have here on my chart, right? So where is the order block? So when price took out this high, this was our break of structure, right? So that break of structure came with what? Came with an order block. So we have this order block that you see down here, and what do you have again? We have this breaker that you clearly see on this one, on this other end. So if you had set your buy limits at this particular breaker, you would have been tagged in here, and price would have gone with you here, and your stop loss was going below the what, below this particular candlestick that you have the what, the fair value gap here. You are not using fair value gaps to get into trades, you are using breakers. But when you are setting a stop loss, you can take advantage of this fair value gap and set your stop loss just below this candlestick that you see here. So guys, if you want to be trading like this, you have to get a good broker, and here we have Mugen Markets, the broker that I'm using, the broker that I recommend. So you can get a classic ECN account, a trader ECN, or a custom ECN. I prefer a trader ECN with spreads from 0 pips, maximum leverage 1 in 500, and this broker offers you crypto deposits and withdraw, safe trading, no delays, which means no slippage. If you have been trading for a long time, you know that a lot of brokers manipulate by use of slippage. So here we don't have that. ECN execution fast, and we have copy trading, palm marketplace, and we are using the best platform in the land, which is the MT4 platform. So if you want to be trading with Mugen Markets, just go to mugen.com or get the links in the description down below. Open your live account with Mugen Markets right now. So let's go back to our charts and look at what, and look at some gold trades, right? So you see we have this yellow order block that you see price rejecting from at the moment. So this is my order block. Why? Because I have had this what, a break of structure, as you can see. So price has broken structure. I did not use this order block. Why? Because this order block did not take any liquidity. You see the liquidity that I've just marked in this area here, it was taken by this giant order block that I have marked on top there, and this order block did not take liquidity. So if an order block did not take any liquidity, it means that it is the liquidity, right? So keep that in mind. So we have marked this one, this order block, and if you go to the M15, what do you see? If you go to the M15, you clearly see that we have what, price moving to the what, to the order block, which is the yellow zone up here. And as you can clearly see, we took liquidity just before we got into that what, into that order block. This is the move to the order block, and we broke structure. Structure was taken out at this particular point, right? So after that, what do you see? You see price going back to retest your what, your order block in this area. So you have an order block and you have this breaker, so you can clearly see and analyze that you can't be taking a trade from this breaker, but the order block is looking nicer than the breaker. So when price moves back to this order block, what do? You strike here, you get your sales, and expect price to take out this trend line that I have drawn here. Why? Because that trend line is the trend line, or is the area where we have a lot of liquidity, and we can be targeting this red line at the bottom there. So this is what you can be doing on gold. And remember, we are trading inside London session, and if you see, this is 9:30, and on your chart right now you can be seeing 10:30, and I'm saying 9:30 because I'm adjusting the broker time to my local time. So my local time London session is 8 to around 10 or 11 in terms of Q zones, right? So this I'm just adjusting to my time, and you should do the same. You understand what's your Q zone, and you also need to understand what's your time frame and your time in your area that you live. So these three here are just the rules that you need to see when price gets into your order block. It has to break structure, it has to retest an order block, and you have to make money. Trade what you see. I've just shown you something to see. Great to have you back. I'll see you in the next video. Hands to the head. Salute.